Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to continue our collaboration series. We have a very special guest on, PlanB. We had him on probably over a year ago at this point. It was a pretty popular interview. And today, we're going to go through, where Bitcoin is today, sort of coming out of the last of this most recent cycle, and where are we sort of setting our sights as we go forward into the next cycle. PlanB, it's a pleasure to have you here.
Yeah, Ben, thanks for having me again with a much lower prices than the last time we spoke. So must be interesting.
Yeah, we've come down almost 80% at this point, which, as we know, right, Bitcoin likes to correct 80% during the bear markets. But perhaps a useful place to start would be, kind of what happened last cycle. Because I mean, man, like when we talked back in like Q3 or something. I don't remember when it was exactly, but one of the things we talked about was sort of like where Bitcoin would go by, in 2021. And I mean, we made it to $69,000. And I mean, you put out one of the most insane price predictions that kept hitting every single month, right? Like I remember watching it and seeing like it was like every single month it was basically going down to what you thought it was going to be. And then of course we deviated at the end of the year. But what are your thoughts on the last cycle? And yeah, maybe we'll just start there.
Yeah, well, last cycle, or at least since I published the article in March 2019, has been a hell of a ride for me. I never ever imagined the impact and the effect that would have on well, yeah, on Twitter, on Bitcoin, on me personally as well. So um, just publishing that stock to flow thing and seeing it unfold, including all the discussions, was a big fun. At least until last time we spoke, until the 2021 when everything went up as predicted or expected, I should say. Um, so at least we have that. It's not that nothing happened after the halving, but one thing is for sure, and let me repeat that. I mean, we did not reach the $100,000 that I thought we would have as an average, mind you, right? As an average, and we would go way beyond that. So that did not happen, um, which is too bad. However, it's not that the world was boring last couple of years. Man, what happened? It was COVID first, and all the aftermath after COVID. Then the China mining ban in what was it, May, June, somewhere 2021. That put an end to the 100,000 hopes already, and then it well tried the market tried a second time to reach that 100,000. Then of course we had this war in the Ukraine, and inflation picking up, and all the rate hikes and quantitative tapering instead of easing. So the entire world sort of did an 180. Of course, that's all not in my model. The model is fairly simple, as you can see on the screen there. It's the white line. And basically, it was the same and still is as the logarithmic regression curve that we basically have since 2014 when Trololo published the first version of that, and later versions were, of course, updated. But yeah, you can see in this chart as well. In 2021, both the logarithmic regression and stock to flow model were pretty high and pretty in line with the red dots with the Bitcoin price. But right now, that totally changed because of all the reasons I just said. I didn't see it coming. I think very few people saw it coming, and well, that's where we are today.
So one of the things that one of the things that we've talked about too is that there's multiple versions of the stock to flow model. And I mean, I know one of the things you said was we didn't reach that sort of $200,000 milestone as an average price, but correct me if I'm wrong, that was the stock to flow cross asset model, where you also have you also had some more conservative models as well, correct?
Yeah, it's in fact there were three stock to flow models. So the first one that was published in March 2019 um, had an average price of $55,000. That was the most accurate with hindsight.
Right.
So the original was the most accurate. But when the price started to move up in 2020 after the halving with the new data, I recalibrated that model on yearly data. So not on monthly data like I normally do, but on yearly data only. So um, and also yearly data from before the halving to get a real out of sample uh, yeah test, if you will, and prediction. So and that yearly model that had an average of 100,000. And well, since the price went up and up, we sort of went with 100,000. I guess hope was also part of it. Um, with hindsight, the 55,000 model was more correct. And of course, there was the third model, was the stock to flow cross asset model. That was more like a fundamental model, not based on historical prices of Bitcoin and stock to flow ratios, but based on the stock to flow ratios and the market caps of gold, silver, real estate, and other assets. That's why we call it the cross asset model. And that was the sort of holy grail. Can we predict the price of Bitcoin without or with very little historical data, only based on other assets that also are scarce, like Bitcoin? So that had a very fundamental value, but also very, very rough and very wrong, or at least the price is very way off. And the stock to flow cross asset model had a price of $288,000. So there you have the 55 of the original, the 100,000 later updated on yearly data, and the 288 based on other asset data. So that's what makes it even more confusing. Maybe for I noticed from a lot of comments on Twitter is that I had this second model, which had nothing to do with stock to flow, which was the floor model. And that was the model that sort of predicted each month, very well for a while, for 3 months in a row.
Yeah.
And that was sort of, well, I guess that was lucky. But that was picked up, of course, on Twitter. And man, I had 2 months of almost 400,000 followers added both months, so a million followers in 2 months, and that was sort of crazy because now I have this very schizophrenic following of the original 1 million people that followed me from the first article, the 55 stock to flow, and the other million that came from the floor model that was right, but then very wrong and abandoned, by the way. So that floor model obviously failed, and I will never use it again. The stock to flow model, that's, well, I think another story. So
Sure. Yeah, I mean, I think one thing to remember is that, and I've found this myself, right? Is that like when you're sort of in the accumulation phase before a bull market, you can come out with all these models, the price eventually goes up, and then all of those people are very happy. It's always the people who come in very, very late who aren't as happy if it doesn't go up that final percent, right? Um,
yeah, it's exactly like that, and it's very it's crazy. Like I have people that thank me, thanks for the article in 2019, because everybody was selling and everybody thought it was going to zero and Bitcoin was dead, and you said it would go to 55,000. So I didn't sell, and that's why I'm a millionaire right now. Thank you. And then there's the other million that called me a scammer and a fraud and whatever, because we didn't make the 100,000. And of course, all we do is share the modeling that or
Right.
let me speak for myself. I share my stuff because I'm excited about it, and I want to share it. I want to discuss it and get some insights maybe that I didn't have. But but yeah, it's a very interesting dynamic when money is involved and so many people are watching over your shoulders.
Well, I think another thing that I constantly remind myself of with all the models that I put out are that they're like, all models are wrong, some are useful, right? Like, no model is going to be perfect. They're all going to have, caveats to them, or, some of them will play out better than others, but none of them will play out perfectly. But
Yeah.
but I mean, going back to so perhaps what we should do here first is talk more about the stock to flow model that was predicting a 55K
Yeah.
average price for Bitcoin. And during 2021, we spent a lot of time at around that price. Sometimes we were below it, the 30 to 40K range, but then other times we were above it, 50 to 60K and all the way up to 69K. And on this chart, I guess these, if we look at the white line, which is the stock to flow model, looks like this is the original one, right? Because it's not all the way up to
True.
100K. So this was the 55K model. And the red dots were, I mean, they were right on top of it, right? Right on top of that white line. And so we could say that it did a pretty good job, right? Like, that model did a pretty good job. Now, what are your thoughts on it right now? Because right now we have fallen below it. Do you think by the next halving, which I know is a big part of the stock to flow model, I mean, it's based on this. Do you think by
Yeah.
the next halving, the price of Bitcoin kind of get back up to that stock to flow model line?
Yeah, I think so. And you correctly say the halvings play a big role. And in fact, and that's why I like this chart so much. We all have this logarithmic regression sort of bending curve. I think you use a variant of that as well, which is based on a little bit lower. So only the non what is it?
I just fit it to
Non
data that I consider not to be in like a bubble phase.
Yeah, not bubble data, and but that's also a variant, and I mean everybody is using that, and it's helpful. I think it's useful. It's not it's wrong, as you say. All models are wrong,
Right.
but it's useful. The only thing that I added to that model, in my opinion, is that I saw there seems to be some 4-year cycle in it. That is, the main rise in the Bitcoin price is always 1 year after the halving. And so you see the white line of the stock to flow model jump in 2012, 2016, and the halving of 2020. And in every three years right after it, the Bitcoin price rises. And what's quite interesting is that while there was not a halving in 2011, not a formal halving, the stock to flow ratio in 2011 did double. So it was sort of an unofficial halving there. So that's in fact the only thing that caught my eye at the time, and I added it. Yeah, well, in the model, and it's sort of like you see in the chart. It sort of says the same thing. Bitcoin goes up and to the right. Um, and the only thing that it adds is that the real rising is after the halving. So coming back to your question, yes, I think the next halving will again be a very important milestone for Bitcoin, because the miners will see their revenues halve, and they have to be compensated somehow to keep their operations running. Of course, they know it's coming, so they'll plan for it. But and I can predict that there will be a lot of people again, like last halvings, that will say, okay, there will be a minor capitulation and a death spiral, and Bitcoin will go to zero, and it's all over. In fact, they're saying that now for other reasons, but that will that will continue. And we heard that last three halvings, the death spiral narrative and the minor capitulation narrative. Well, I, I think we'll hear it again, and I think it's a very fundamental and structural moment for Bitcoin again. So it either makes it or breaks it. Of course, I think we'll make it. And yeah, if you go one step deeper, you see that this low, so the bottom of the bear market, is also about a year, 1.5 year after the all-time highs, and that's also true today. It was true in 2019, in 2015. It's also true today in 2022. But from that bear market, that bottom of the bear market, once we hit the bottom, it will go up, and so the rising, if you will, is not starting at the halving or after the half. It will start when the bottom of the bear market is reached, and that could be today or next month or maybe 3 months from now, but it will come. That's what I think. And well, one more thing, the halving cycle. This halving cycle, of course, is not over. So we're 2 years in, a little bit more, I guess, 2.5 years in. But we have still 1.5 year to go. So a lot can happen in that 1.5 year. And I know it doesn't look very well right now with the FTX thing and all the, the fallout of the partners and investors in FTX. But we have 1.5 years to go. So once the the quantitative easing starts going, or the war in Russia, in Ukraine is over, or whatever trigger there will be, we could easily reach that area in this chart. Let's say 2024, where the logarithmic regression and the stock flow model are crossing, which is in the $100,000 area. Yeah, I would not be surprised.
One of the things you mentioned is that, and I fully agree, is that the bottom normally comes well before the halving. And my last cycle, if we had, if people had waited until the halving, they would have already missed out on like a 2.5 to 3x from the bottom.
Yeah.
So that's always a sobering reminder, right? Like that the halving, while it can while it can lead to higher prices, it normally comes well after a major bottom for Bitcoin is in. One of the questions I have, though, is, this is the first cycle where we've breached the all-time high from a cycle that came before us, right? So like right now, Bitcoin, at the time of this video, just for future reference, the price of Bitcoin, I think is right around $16,000, which is $4,000 below the 2017 all-time high. So I guess, do you see that having a lot of influence in kind of what Bitcoin is capable of doing in the next cycle? Are we seeing those diminishing returns really have a big effect, or do you think Bitcoin can overcome that and still put in oversized gains in a future cycle?
Yeah, I think that's the $100 trillion US question. Frankly, I don't know, but yes, it of course I did not expect it. I did not expect to get that the all-time high of 20,000 last cycle would be breached, and it certainly implies or makes one think about diminishing returns, which is very well possible. However, yeah. Generally, I'm not so much focused on the all-time highs and the bottoms. To be honest, I see that as either liquidation events that could go really deep, or FOMO tops like 2013. That was crazy. that jump in I guess it was from 100 to 1,000, 10x in a couple of months. So I'm more focused on the average. And view the tops and the all-time and the lows as an outlier, but it could be diminishing returns as well. It certainly would make sense as well, because I mean the price goes up, but the amount of capital that goes with it on exchanges and that's invested in Bitcoin. It gets really huge, and it's really different if the market cap of Bitcoin is $1 million or 10 million or even 100 million in the early years, versus 100 billion or even $1 trillion last couple of years. So yeah, there is a limited amount of money, and it will not go exponential forever. So there must be natural form of diminishing returns. So yeah, I totally see what you mean here.
Do you think that one of the things you mentioned earlier is that all these major events occurred, and I mean, it seems like the entire world has just gone risk off, right, for 2022 for the most part. Some obviously some areas have done better than others. Do you think that if some of those things are not resolved by 2024, could that continue to affect Bitcoin or temper its returns even more? Or do you think Bitcoin is more so dependent on this just like a cyclical 4 year cycle idea and the halving event, that the halving event will be much more important than whatever's going on in the world at the time? Because one of the most common questions I get is that Bitcoin has only ever existed during like a secular stock market bull market when we're going through quantitative easing and the Fed's printing money like crazy. Uh, could ongoing high inflation, where maybe the Fed is a little bit more cautious about printing money, could that affect things? Do you think, or you think again that the halving will be the much more important factor to focus on?
Yeah, first of all, I think that the Fed will pivot at a certain moment. They will continue debasing the money and doing quantitative easing or some other form of printing, quote unquote, because they're creating it and not printing it. Of course, it's digital, but they will go on, and this has been going on since the Romans actually. They debased their currencies, and later on, every ruler, every government has debased their currency. So it's not like 2022 will be the year after thousands of years of debasement that the governments will stop debasing. They will go on. Of course, they will never say that, and they will call it. They'll give it a different name. But
Right.
as soon as the inflation is gone, maybe the war is over, and in fact, we already see prices going down, oil prices and consumer producer prices in Germany go down. So maybe it's over, and I have no doubt that the Fed and the ECB and all the central banks will resume their debasement, and which is exactly why Bitcoin, of course, was made with this predictable supply. But yeah, your question is again a very interesting one, and I would say those are the main scenarios. Either there is external macro environment that goes maybe bad and continues to go south, and drags Bitcoin and everything with it, or there is some internal thing, some internal momentum, and maybe the halving cycle is that thing in Bitcoin that will make it go up. And what I can say about that is that the through the on-chain analysis, which by the way did not see the crash coming. So I know that it's also a model. It's wrong. It's useful, I think, but it's certainly not a magic a silver bullet. But through the on-chain analysis, we can see that all the people that bought at very high prices above 60,000, those people are gone. Those are the people that sold the most in the last year, in this year, in 2022. So those people were looking at a huge loss, of course, which gives some very negative momentum in the Bitcoin market. That negative pressure, if you will, is gone. And the people that bought the Bitcoins from them, they're looking at a buy price of, 16,000, 20,000, maybe 25,000. We're sort of range trading around 20,000 for the last half year. So that's a very large part of the market bought around 20,000 plus or minus 5,000, and that gives totally different pressures in this small Bitcoin investment system. Those people have the time. Those people are not sitting at huge losses. And I remember that very well because my first Bitcoin I bought in 2015 when we just came out of that bear market. So it had been oscillating around 200, and then all of a sudden it jumped to 300, 400, and that was the moment I knew it's not dead, and it will it will continue. Mm-hmm. I guess everybody is including myself, is waiting for that moment that we see it's not dead and that it still has some life. But once we see that that going on, then all those people that bought the last 6 months will be in profit, and there will, and Bitcoin will have his own momentum in this maybe deteriorating macro environment. So in the end, of course, macro influences Bitcoin. We've seen that last year, but in the end, I think the internal dynamics of Bitcoin with a limited supply, which is the only asset with a limited supply like that. Of course, gold has limited supply as well, but Bitcoin is beyond gold in scarcity terms. I think that has a dynamic of its own, and yeah, it will be very interesting to see that playing out next 1, 2, or 3 years.
It's interesting because a lot of these macro events, like there is a real chance that by 2024 they could have resolved, right? Like, you know, a good chance. I mean, if the Fed pushes us into a recession, you could argue we're already in one. But if you know 2023 is just a full blown recession because of all these rate hikes, inflation could come back down. You know, we get everything reset right in time for the next Bitcoin halving out in 2024. So I guess my next question, and then we'll talk about a few other charts, is what are your general expectations for 2023? Because I mean, a lot of times, you know, we had 2014 bear market, 2018 bear market, now it's 2022 bear market. There's a lot of talk, right? If you look around the cryptoverse, a lot of talk about, you know, some people are worried that it's just going to continue going down over the next year. Do you think it's going to spend too much more time going down, or do you think, you know, 2023 will be more like a choppy year where go some up and down, kind of like 2015 and 2019? What are your general thoughts for 2023?
Yeah, of course, Bitcoin can go down. I know there's people waiting for 14,000, which is, of course, minus 80% from the 70,000 high, which all bear markets seem to have reached. Minus 80% from 70,000 is 14,000. And then there is a group that's waiting for 10,000, which is 85% from the top. All possible. I don't think it will happen, but it is possible. What I think will happen is that we will see a bottom somewhere next couple of months. And I mean, the bear market of 2018 and 19 was about 6 months. We're obviously in 6 months now. Maybe this will take longer. Maybe this will be like 2015, where it took like 9 months, I guess. So that would mean like 3, maybe 4 months of sideways, with some up and down, but mainly sideways. And then I guess the force of the halving and the force of all the people that have sold with a loss, and the new buyers that have bought at a very attractive price, that dynamic and the halving on the radar, that will come into play. And so I could see a steady rise and a start of the bull market no later than, let's say, the end of Q1 2023, and then going up towards all those lines, whether it be the stock flow model or the logistic regression or some of the other lines. But yeah, that will be it. I don't think 2023 will be spectacular, but I think that dynamic that we talked about, and maybe one will play out. And maybe one more thing about that dynamic, because the same is playing out in the stock market as well, and it might be a good thing, right? It's from a macro global perspective. A lot of people have lost money, and it's mainly the people that had the stocks, right? The older people, the older generation that already had a very fantastic stock market run in the last 10 or 20 years. And at the peak of the market, we have been talking about the younger generation that is confronted with very high housing prices, very high stock prices, and that has no interest rate, no yield on dividend yield on their stocks. So basically has nowhere to go with their money, which is very unfair. Well, right now that's all returning, right? So I guess it's sort of fair when the markets return to a healthy interest rate of, let's say, 5%, on your bank savings, and a dividend yield of, let's say, 10% on stocks. So it's sort of the economy, cleaning itself and restoring to a healthy state. And I think that's also what Bitcoin is doing. So I think we'll start returning to a healthy state in 2023.
Yeah, and one thing about higher interest rates is that it could help cleanse the crypto space of some of the more useless things, right? And focus the money on the things that are actually more useful. That could be a positive effect, I think, of higher interest rates, is exposes sort of the zombie companies and stuff, and helps the other ones to sort of thrive a bit better. But I wanted to talk about a few other charts here, because I know you have some other ones as well. It looks like this is the realized cost, the 2-year and the 5-month realized cost. Would you like to walk us through what this chart is and what it's telling you?
Yeah, and first of all, this is data. Most people use Glassnode data for on-chain. I extract the data myself from my node with a Python script. It's in fact, if you can program a little bit, it's fun to do and it's quite easy. I'm not a programmer, and I was able to do it. But it's the black line is the realized price, and I call it the realized cost price, because what it basically is it looks at all the Bitcoins out there when they last transacted, and then look up the price where they last transacted. So it's sort of the average buy price of all the Bitcoins out there, and that's around 20,000, I guess, 21,000. But you can of course, it's sort of the moving average cost price. That counts all the Bitcoins from January 2009 until now. But of course, you can shorten that period. So you can look at, all the coins that moved last 5 years, what was the average cost price of that? And it's sort of a 5-year moving average, but then not equally weighted, but weighted with the coin distribution of those periods. And you can make that period even shorter. So the 2 or the 5-month realized price, and people call that the short-term holder price, but it's really the 5-month realized cost price, and that's the what is it? The light blue line. What we're seeing at the moment is that Bitcoin, the red price, the Bitcoin price, the red bullet, is below the realized price, below the 5-month realized short-term holder price, and below the 2-year realized price. So it's below them all, and that happens. That happened before. It happened at the bottoms of the bear markets in all previous periods, in 2011, in 2015, and in 2019, 18, 19, and we're right there at the moment. So yeah, it feels like the whole world is falling apart and Bitcoin is dead, and of course it felt the same way in those earlier bear markets. But the fact is, we've been there before, and it's not that crazy of a thing to see right now. But what is crazy, and I wasn't there at the time, is 2011 when we went that much below all those realized cost prices. It must have felt awful at the time. I wasn't there. I'm glad I wasn't there. But right now we're here, and I guess the normal flow of things will happen again. So Bitcoin will in the end go up, and we'll see a Bitcoin be above the 5-month realized price, and then the 5-month realized price will go up again above the realized price, and then we know for sure that the next bull market has started. So I'm watching this chart like a hawk. I think it says a lot, and it's a waiting game.
I mean, it's an interesting chart because I mean, just briefly looking at it, I mean, the observation that obviously comes to mind, which you said, is that, well, I mean, sort of just taking a little bit of liberty, is that market cycle bottoms for Bitcoin have occurred when we're below the realized cost, the 5 month, and the 2 year. And I mean, every major bottom was when that occurred, and that is where we are right now. Now, that doesn't necessarily mean it has to be this month, right? If you look at 2018, you can see it took about till the third month of being below those levels, and it looks like we've spent a little bit of time here off and on below some of these prices. But I guess this is one of a decent chart to give you some confidence that while the bottom might not be in, we're still in terms of time, we're somewhere close to it, right?
Yeah, exactly. And it was a sort of a very interesting last 2 months because if you look at not the last, but the one before, the red dot before that, the second last bullet, it was sort of going up again and above it looked like it was over. And of course, we all hope that. And on the other side of the argument, there were people that said, hey, but the short-term holder, the 5 month realized, is not yet below the realized, so we have to wait for that. And of course, that group got it right,
Right.
and that's what we're seeing right now. So it's and again, it's not even a model. This is just historic data. It gives you some situational awareness, but it does not guarantee anything, and it does not mean that the history will repeat itself.
Right.
But what it really does tell you, in my opinion, is what we have been talking about, that this very specific dynamic within Bitcoin, that people that bought very high at a high price, so let's say above 60,000, they really moved the realized cost price up, and when they sell to buyers at a lower price, so they sell at a loss, that of course lowers the cost price as well. So the fact that the short-term holder price is below the realized price, it also means that those buyers at high levels are indeed gone, and that pressure is also gone. So there's no people with large losses. Most people are now, well, sitting around the level that they bought, a little under maybe right now because we're really low at 16,000, but not that bad. So everybody is sort of betting on this scenario of, well, this is the bottom, or at least in the next couple of months, and not sitting at a loss or having margin calls or liquidation pressure or all that kind of stuff.
Yeah, I feel like a lot of people, they want to time the bottom to the day, but the truth is most of us will not buy the bottom, right? Just like most people won't sell the top. And it's
Yeah,
probably why you're not focused on that, right? You're more focused on long-term averages.
very good point. Yeah, I know, and I have accepted the fact that I will not time the top and the bottom well, and this, I guess that's one of the first lessons in finance. Just forget about predicting the top and the bottom right, because you will not make it, and you don't have to, because you can be a little later. You can still make a lot of money if you just wait for the confirmation that the top is over and or the bottom is in, and yeah, you miss some upside and some return, but at least you miss all the risk as well.
Yeah. Well, it's like back in 2019, people were worried. All right, they didn't want to buy at 4K because they missed buying at 3K. When it's at 60K, it's like, who cares, right? Like it has a way of making previous arguments seem completely pointless in the future, and yeah, just to recognize that is sort of something that we see play out over and over and over again. Now, I like this chart. I follow something similar to this as well. I actually just put out a video on the supply in profit and loss, and it's actually a very cyclical indicator. The way that I look at it in terms of, like, when they, when some of these long term or like when some short term moving averages of the supply and profit and loss cross. But could you walk us through this chart because it looks like you're showing it in a different way and maybe even a more aesthetically pleasing way.
Yeah, it's the same thing indeed. I watch your videos as well. I know you're looking at the same thing. I know Will, Clemente, and all the on-chain guys are looking at it as well, of course. But it's yeah, it's the a bit of the same analysis as the last chart, but then we look at which coins are in profit and which coins are at a loss. So basically, everybody that bought last year in 2021, of course, is in loss. And everybody that bought before, let's say, the mid 2020 is in profit, roughly. But then you can, if you measure that in a percentage, then you see it, like you say, oscillating between roughly 50% and 100%, both in profit and in loss. And that makes it and it's just another way of looking at this internal dynamic in an asset class, and it also shows that, like the other chart, that right now it feels like the world has come to an end and Bitcoin is dead, but in fact we've had periods before, we've had bear markets before where there were even less people percentage in profit, and it's temporary. So after the percentage in profit, there comes another bull market, and it's very cyclical, unless of course the asset class dies. But that, I mean, if we sort of accept that Bitcoin is here to stay, because the invention of proof of work and the blockchain is useful for humanity, then this asset class will also see a cyclical dynamic of people that are in profit and then sell their profit. They take their profits, and people in loss, or less people in profit. And that sort of marks the bottoms. And yeah, I think it's a very... I joked on Twitter about it. Who needs technical analysis if you have this kind of data? Because it's so clear and so, well, not technical. It's fun. It's fundamental, almost like demand and supply. Investors take profit at a certain level. If it's 2x or 3x or 5x, and they cut their losses as well. So there is a very, it's like a investor psychological dynamic that you're seeing. That's my opinion. I like it very much.
Right, and it sort of gives you an idea of, the risk at any given time. Like, I mean, like 2014, 2018, I mean, Bitcoin also felt somewhat, I mean, it never feels alive after going down for a year straight, right? Like, it always kind of just feels somewhat depressing. But I mean, the best times to buy were when it felt the most depressing, right? It's not when we're in the bull
Yeah.
market. It's when no one really wants to buy.
But
One of the
when
things
the
I always tell myself in the accumulation phase, like the year after the bear market, when people are just sort of slowly accumulating and waiting for the next bull, one of the things I always tell myself is I'm like, I can't say for sure if there'll be another bull market, but if there is, I will be a part of it.
That's it. That's it. That's the same thing. Like saying, hey, I don't catch the exact bottom or top, but when it happens, I'm part of it. And yeah, it's just a scenario you're betting on. And what I like here about this dynamic is that red is always followed by blue, and then is red again, and then blue. There's never no blue. you
Right.
have to have, and also no red, so that you almost know for sure there will be a next bull market. It might not be tomorrow, or next year, but then the year after, or the year after that, there will be a next bull market. And yeah, if you have the time, if you're not leveraged, if you're not betting with too much money and just playing it with for fun and laughter, then all is good. So
Yeah,
yeah.
if you're watching the charts every minute, then probably means you have too much money in it, right?
Yeah, absolutely, yeah.
So here's another chart. This is the Bitcoin realized return. So again, another aesthetically pleasing chart to look at. Could you walk us through exactly what this is? I think this is the last chart we have.
Yes, and this one shows the not the coins that still exist at the moment. So the realized price, that's all the coins that currently exist against their buying price. So the average buying price. This is the realized return. So this is what people lost or made as a profit in this particular month. And some months all the selling is done at a profit. Those are, of course, in the bull markets. When people sell, they sell for a profit. And in a bear market, people sell at a loss. And that's a big difference, of course. If the selling and buying, if the transactions are done at a loss on average or at a profit. And it's very interesting pattern. It's basically the same pattern as the other charts where you see that there is a minus 30% loss last month on average of all the coins out there. This is on-chain coins, right? This is not the paper Bitcoin on the exchanges and the traders. It's holders, and there's a lot of caveats as well, because if people reorganize their wallet, they just send their own Bitcoins to another address that's also their address, then this on-chain analysis, of course, counts it as a sell, as a transaction. But disregarding that, it shows very, very clearly that in all the bear markets, people have been selling at a loss, the blue, and in the bull markets, of course, they've been selling at a profit. And yeah, well, I guess it's waiting for the green to return. That people start selling at a small profit again, 10, 20%, green, yellow. And that's why last month, not the last blue bullet, but the green one before that was very hope-giving. But that turned out a wrong signal thanks to FTX. But yeah, I think the pressure and the dynamics in the market are such that a lot of people, and we know that, right? We have talked about it. We know that a lot of people that bought at the high levels of 50 and 60,000 and over, they're out. They sold at a loss. That makes those blue dots, and that pressure gone. So all the buyers that bought at those levels, they will start selling at a profit once the price goes up just a little bit. If we go to 20,000, and all the people that bought at 16,000 are, of course, at a 25% profit. And yeah, it's again this waiting game. But I'm quite sure if I can make a prediction that we'll see green and yellow dots again, and even red.
It's almost like human emotion never changes, right? It's just like a cyclical thing, and we go round and round.
That's exactly what I'm saying to people that say, "Well, we're in very different. This time it's different because the macro is very different. We have a war and we have quantitative tapering instead of easing." Yes, all true, but human psychology doesn't change. It's greed and fear, and that's displayed in those charts.
Yeah, for sure. And the last thing I'll do is I'll just let you provide some final thoughts. But if you're watching this video, I would like to tell everyone to go follow PlanB on Twitter. His handle is shown on the screen at 100 trillion USD. We will provide a link to that though in the description below. We'll also pin the comment as well. So he puts out a lot of these charts that you see right on the video. He'll occasionally update them on Twitter, right, and provide his thoughts on the market. So again, if you're not following PlanB, make sure you go do that, and I'm sure he'll be here every step of the way, right, in following this this sort of bear market to see it through, and then the accumulation phase, and then the bull market to hopefully come after it. But PlanB, I wanted to give you the last word. Any final thoughts for the audience?
Well, first of all, thank you very much for having me again. I love talking about these patterns, about these models, about this data. I know we're not always right in predicting this stuff, but at least talking about it and seeing some normal patterns, not only technical, but also the psychological and the fundamental. I think it's very important. And let's wait for the bull market to return, because that will return. And although it doesn't seem like it at the moment. Thank you very much.
Yeah, maybe next year, maybe in another 6 or 12 months, we can bring you back and then talk about it, because it'll probably be a bit of a better time.
Would love that.
So, all right, thanks for coming on, and we'll see you next time.